Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx. Welcome to Market Talks with Dr. Stoxx. Sorry for the 2 week absence or so. I was really busy working on our new webinar, the Chart Reading 201, which just went onto our website this week. It is, one of the most information-packed webinars I've ever produced. I really should have broken it up into a number of smaller webinars, but 3 hours of absolutely jam-packed information on how to read price charts at an advanced level. We've got everything in there from chart patterns and technical analysis on different indicators and candlesticks to a variety of setups that I like to use, plus a 5-step process you can use to find new trades each trading day. And I don't want to push it as a commercial here, but I'm just so excited about this new product, and just wanted to explain to you why I haven't been doing this on a weekly basis. But let's get back to the charts. We had been looking at the S&P 500 in our more recent Market Talks with Dr. Stoxx. Today we're going to look at a chart of the spot price of gold. I have a couple of blog posts on gold where I outline some of the macro and fundamental parameters of the gold trade that's going on right now. It's clearly in a downtrend, the price of gold, that is, along with the mining index and the junior miners. But it seems to have hit a bottom where we've seen a rather sideways constructive pattern develop here. And I want to look at the chart a little more carefully to see if we can determine sort of what are the points of interest on the chart and whether there might be a decent trade going forward, at least for the short term. This is the daily chart of the spot price of gold, up to date, including today's trading. And what we can see here is, if we scroll back out a little bit, we are clearly in a downtrend. Downtrend is always marked by the 50-day moving average, where price stays predominantly underneath it, and it's in a downsloping position, which is true all the way through the middle of August. Then we have this nice clear break above the 50-day moving average. The 50-day moving average flattens out, which is more or less where it is at today, very flat. And we have price moving up above it, down below it, and perhaps back up above it again. This is a classic trading range sort of action. And trading range action after a significant downtrend is always consolidative of the trend, and it can lead to further downside in a downtrend, but it could also be indicative of a bottom. And we want to look at, how do we determine whether it's a consolidation that is going to continue in the direction of the dominant trend, or whether we should or are more likely to see a reversal from this point. One of the things I want to point out, because it has been in the, I wouldn't say the headlines, but technical analysis of the spot price of gold, those folks have pointed out that there appears to be what looks like a kind of head and shoulders formation here. If we draw a trend line underneath these two pivot lows, we certainly can see something like a left shoulder here, a head in the middle, and a right shoulder over here. And my only problem with that is that a head and shoulders topping pattern, which you would expect to break to the downside, is most effective at the top of an uptrend. And here we are seeing the head and shoulders formation at the bottom of a downtrend. So it would be, if anything, a continuation pattern. But those continuation patterns are really, in my opinion, in my experience, more of a 50-50 flipping of the coin kind of thing. So I wouldn't go so far as to say that this head and shoulders formation here is anything we need to worry about if you're focused on the bullish side of this trade. But if you're on the bearish side of the trade, there certainly are a lot of reasons to get excited about further downside. Let's scroll out a little bit and draw in a primary trend line. You know from my Chart Reading 101 webinar that you always draw your primary trend line in a downtrend over the tops of pivot highs. And we have something that looks like that with two recent touches on the pullback into that downtrend. And it's a downtrend that is very well established. I mean, we could even pull it back a little further, and we can see that we have 1, 2, 3, 4, 5, now 6 touches of that trend line, which is a very, very well established trend line. You only need 2 touches to establish a trend line. Anything more than 2 increases the strength of that line. Now, we also have a secondary line that we can draw in under these pivot lows here, and that would mark our support line. And anything down to that line, we would expect price to hold and likely reverse to the upside, or a break below that line would suggest that we would get a continuation of the dominant trend. So as we can see, if we scroll in a little bit closer here, that these two lines are beginning to converge on each other, and that is consolidation. That's price consolidation. The trading range between the pivot highs and the pivot lows is getting narrower and narrower. Now, we would expect price to pull down into the support line, which is suggesting then a drop of, another 25 points or so in the spot price. But we do have a couple of things that would support a bullish reversal at this point, and then a breakout of that downsloping resistance line. We have, first of all, a MACD signal line which has crossed over the 0 point, which indicates to us that just from a sheer moving average perspective, that things are looking a little more bullish than they were. When we had the same signal line crossing over the 0 line previously, back here in late July, it came in the middle of this little pullback. We had a little more pullback, and then we had a nice resumption of the relief rally on up into that trend line. And so I would expect that we may well see something like this August to 1st of September pattern. The price in August, all throughout August, was very bullish for gold, and we may well see that again here in November. November is typically the strongest month for gold for a number of reasons, primarily because of in India there are a lot of festivals that go on that lend themselves to the buying of gold. However, there are some other factors going on in the Indian government right now. They're trying to curb some of that excessive buying, so it's really kind of a wash. But nevertheless, November does tend to be a bullish month for gold to the tune of about 3% up. And that may well what we see here in November if August was anything like a precedent. We also see the oversold stochastics down here. It's down below the 25 line. And when you're in a flat trading range like this, with price moving up above and down below a flat 50-day period moving average, then the stochastics is an indicator that comes into play very prominently, and we are already at an oversold level, as we were here, which signaled the recent uptrend, as we were down here, which signaled at least a little bit of a bounce, and as we were down here, which signaled that August uptrend. So going forward, I would suggest this. You don't want to buy gold right here. I would wait until we see a bullish crossover of the stochastics indicator with at least something close to average volume, if not above average volume. I would also be a buyer of gold if we saw it pull back into this lower trend line here with a nice bullish candle, a reversal candle, something like you see here with a long tail on the downside, or something like you see over here, this big bullish engulfing candle with a tail outside the lower trend line and then back up above it. Something like that would indicate to me that this little pullback is at an end. So I would be a buyer there if I saw that, and I certainly would be a very quick seller again if I saw a close below this lower resistance line. The third place I would look to buy gold is on a close above this downsloping resistance line. Anything up above about 1350, 1345 or so, with some good volume on that upside, would also be a third place to buy gold. So if you wanted to, you would wait until your stochastics gave you a bullish crossover. You'd put on maybe a half of a position here. You'd buy a little bit more if it dipped down to the support line, and you could add again to your position if it crossed up above the resistance line. I wouldn't be a seller of gold necessarily here at this point. There's so much bearish sentiment out there. So much of that is already priced into the spot price that I think downside at this point is limited. Upside is where the edge is. But just to be safe, wait until one of those three signals. All right, this is Dr. Carr signing off. God bless everyone. Happy trading.